En los próximos minutos vamos a hacer un análisis del contexto de mercado en un momento en el que las presiones inflacionarias están preocupando y sobre todo están sobre la mesa de debate de los bancos centrales. Vamos a hablar sobre esa retirada de estímulos tan esperada, el ansiado tapering por parte de la Reserva Federal, y también vamos a poner el foco en lo que debemos esperar de los resultados empresariales del tercer trimestre de este año 2021. Nos acompaña Maley, que es estratega jefe de mercado en Tabak. Matt, thank you for joining us in Negocios Televisión.
Thanks for having me.
Matt, Powell and Lagarde expressed frustration at the uncertainty over the duration of the bottlenecks. Both are closely monitoring the situation, paying attention to inflation expectations and the impact on the labour market. However, they are convinced that inflation will be only temporary. Do we believe that?
You know, I think it's going to be very difficult for inflation to be temporary. It's just, the problem is right now is that we're being hurt by two different things. First, we're being hit by the supply side of things, of course, with the supply chain issues that have been affecting the entire world. But we also have wage pressures as well. And so when you combine that, I think it's very tough for it to really to be something that only lasts a few more months. I mean, they've been saying it's been transitory for a year now, and they keep pushing out when they think it will end. And the key thing about this, as you mentioned, the supply chain issues, when you have supply-induced inflation, that is much worse than demand-induced inflation, because if it's demand-induced inflation, that means people have better jobs and getting paid more. They can afford the higher inflation. When it's supply side, it's bad inflation, and that's what we saw in the 1970s. So that's what I'm concerned about.
And now investors are getting ready for a turning point in Federal Reserve policy. Markets are waiting for a shift from adding monetary stimulus to a gradual reduction. Is the economy prepared to withstand an adjustment to this accommodative policy?
I think the economy is, but I do think that it will cause a little bit of a slowdown in the rate of growth. It won't cause a recession or anything like that. But it will also, I think, impact the markets, because they've been, the stock market is ahead of the growth in the economy. And we've seen that with the high levels of valuation. I mean, even though earnings have been good, when you see the being accommodative. And of course, we've seen out of China really all year, they've been involved in a de-risking and de-leveraging policy. And we've seen what that's done to their technology companies, but also all parts of their economy and their markets, especially in real estate. When the second biggest economy in the world gets involved in de-risking and de-leveraging at the same time that the U.S. is going to provide less stimulus, that's got to have an impact on the markets. So I'm still cautious here on a near-term basis.
And what will happen when the Fed's tapering starts? Should the markets be concerned?
I think they should. Again, I think a big part of the rise in the stock market since the March 2020 lows, when the pandemic was at its peak, obviously a good part of it is because the economy has come back. But we can see by the valuation levels that this stimulus has pushed the market well ahead of the underlying fundamentals in the economy, and therefore, when that stimulus comes down, is less plentiful, I think the stock market will have to come in. So again, corrections are normal and healthy. It's nothing to fear. I think it's something to embrace, and people should look forward to it, because I think they'll present some great buying opportunities.
And if inflationary pressures persist, could the Fed take action to curb inflation even if the labor market doesn't reach full employment?
Yes, and I think that's what they've been telling us. I mean, lately we've seen several of the presidents of the regional Federal Reserve banks say that, even though we haven't gotten quite to where they want in employment, it's at the pace doesn't have to really increase. They're gotten very close to the level they want to reach, and as long as it holds steady, if inflation moves higher, and they've said as long as the employment doesn't roll back over, they're going to have to move earlier than people have been saying. And raise interest, not just cut back or taper back on QE. They'll also have to raise interest rates, short-term interest rates, and this is something people didn't think would happen until 2023. If it starts to look like it's going to happen next year, again, that will cause some more headwinds for the markets.
And according to you, Matt, which is the main threat to economic expansion right now?
Well, I think it's this inflation issue again. When you have the whole key right now is that this inflation is a supply issue. Good inflation is demand driven, and we had that in the 1970s when we had the oil embargo and the supply of oil was cut back and prices shot up, not because demand got better, but because supply shrunk. These whole supply chain issues that don't look like they're going away anytime soon is a very similar thing. I don't think it's bad as the 1970s, but it's still the kind of thing was that if people have higher prices, but the companies aren't making more money and people aren't making higher wages, that makes them to spend less, and it causes growth to come down.
And finally, but not less important, third quarter earnings season is coming. What should we expect?
Yeah, I think that one of the things that the market is expecting that there's ever increasing earnings. It's been a great year for earnings. And we do worry that they're going to be coming lower than expected. Now, again, people are already starting to build that in. So if we have kind of flat to versus expectations, we'll be fine. But if we've already seen a few companies in the last couple of weeks talk about. We had Sherwin-Williams and some of the airline companies talking about how their earnings are going to be hurt by this supply chain issue. So if that becomes a wider ranging thing, again, that's another issue to be a little bit concerned about the stock market on a near-term basis.
Matt Maley, thank you for your time. It's been a pleasure.
Thank you very much. Have a good day.